Today's video will broadly focus on what is an overbought and oversold zone. How to identify these zones, what can we do if we are able to identify these zones. So, these broadly are the three questions which we will cover in this short video. What is an overbought and oversold zone? How to identify these zones? What can we do if we are able to identify these zones? Okay, so this is a basic learning video, and in front of you, you have Tata Motors passenger vehicles 3 minute time frame chart, and you can see my custom indicator which I have very specifically designed for Nifty 50 stocks. And in all the coming videos, you will eventually learn regarding every indicator and how to use it, how to execute the trade, how to enter the trade, what can be your target range, and what should be your stop loss. Okay, so now let's start with what is an overbought and oversold zone. Basically, when a price moves in a direction continuously without any deformation, without any resistance, and without any obstruction, let's put it this way, then the price hits a condition where we can actually term that price as an overbought or an oversold price. Overbought when the price goes upwards. Okay, now here the price has gone upwards, but in a broken format, more or less. So we can't really call this as an overbought zone, but it acts like one. So it is very difficult to segregate or understand what will be the high of the price movement or what exactly will be the low of price movement. So our indicator, we have designed this indicator as such, we understand if the price continuously moves in a direction with momentum is also an indicator where let me momentum. Okay, I'll just keep this here so as we can price direction is an important uh, indication as well. Price direction plus momentum without obstruction leads us to an overbought or an oversold zone. Let's take this 19th March 2026 as our pilot day. You can have a look here. We got an high which we didn't identify it as an overbought zone, but yes, of course, it was a small uptrend from here, and we got a gap down here, which and the selling continued. We got okay. Let me explain. This white dots below the bar is is a bearish trend, okay, and these yellow dots above the bar is an uptrend. So you can have a better understanding by associating lower lows with white dots and higher highs with yellow dots. Okay, so lower low white dot and a downtrend would make a lower low, and yellow dots with an uptrend would make a higher high position. Now we didn't get here an overbought zone because these yellow dots were not very prolonged, and these basically are derived from 9 MA and a higher time frame MA, or a higher value MA. And if for a particular time period 9 MA is above that higher value MA, for example, it can be 27 MA, it can be 36 MA, or a 45 or a 54 MA. Okay. Uh, and if the 9 MA survives above that higher value MA, then we start seeing these yellow dots, and hence we can understand this is an uptrend for a particular time frame. It can be for 3 minutes, it can be for 15 minutes. Okay, here as well we can have that sort of uh, presentation by our indicator. Here it's a downtrend, it's a smaller one, but it's a downtrend. Here we can see it's an uptrend, but will the trend survive? Is it the bottom? That will understand by uh, pinpointing an overbought or an oversold zone. Okay. Now let's have a look here. I'll put an example of what exactly an overbought zone looks like. Okay. Now this is something which I'll call an overbought zone. Okay. Now these yellow dots have crossed a threshold. Okay. And from this point, we can actually have that indication that the price is in an overbought zone. Okay. Now the buyers have exhausted their interest and their activity. So after this overbought zone, we can expect a downfall of the price, which can be with momentum and without momentum. Sometimes it's not necessarily true that when you get an overbought zone, the trend would reverse. Maybe it might go upwards again after getting an overbought zone. But now, this example in front of you is a classic example of uh, getting an overbought zone and getting a good selling after that zone. Okay. And from our indicator, we can understand after a couple of yellow dots above the bar, which we get as an uptrend, we start getting these green dots at the bottom. Okay, these green dots, and these green dots, we identify them, we have coded them as an indicator as overbought zone. Okay, and same is for the red ones. Now these white dots, you're getting it from here. Once the white dots or the 9 MA line crosses a threshold of 30 candles, of 100 candles, or whatever you feel is right, how you look at your markets, it can be very different for gold or commodity. Well, this indicator specifically, I have designed it for Nifty 50 and Nifty 50 stocks for intraday swing trades, and again equity trades as well for in longer time frame. So this is an oversold zone, but you can see this overbought has again converted into a good selling, but this oversold has not really done so. Okay, we have got a price saturation here. After the oversold zone, the price has consolidated here. It has again bounced back, but not challenging the previous high, rather being very less motivated to go up there, and again falling down. So, but you can obviously have a better understanding by identifying these zones. Okay, now let's have another example. Here, all the way up, we can see overbought zone here, here a bit. Okay, here as well. But after this overbought zone, price actually lapsed and started to consolidate. Okay, before giving a final blow here of like exhausting the buyers. Before this, our price actually got restricted here on 15th of April. Now that we have understood what is an overbought and oversold zone and how to identify these zones. Okay, we can move to our third point. What can we do if we are able to identify these zones? We can make a strategy out of these indicators. It can be one, two, maybe couple of strategies which you can make depending on what parameters you are including while studying the markets and before trading, of course, before trading. So here on 29th of April, we get an oversold zone, okay, which is followed. Now, general understanding would be our price should get reversed and we should look at the buying spree after we get an oversold zone. That is not the truth, and it is not the only condition. Look, we can't really have a firm understanding that this is the low or this is the bottom of the price or the chart. A oversold zone can be extended to a great bigger oversold zone again, which here in this example is again extended to a oversold zone. Now it is very difficult to understand if this is the bottom or this is the bottom or this lower low is the bottom. Okay, it appears to be this lower low appears to be the bottom because the price has consolidated here. So, anyways, if you are able to identify an overbought or an oversold zone, you will have the confirmation of such zone when the price consolidates further in that range. Okay, by not breaking the low which is formed by that oversold zone. Hence, how to get an entry. Okay, that depends on what kind of strategy you are invested in, what kind of studies you have been going through while trading or understanding, or what kind of patterns you see, okay, in this consolidation zone. Now, for me, if this is the greatest fall, having three oversold zones, okay, of Tata Motors passenger vehicle, I will wait for a perfect consolidation zone, okay, which is this zone. Now, when the price breaks this zone, I again won't be very curious to take an entry because it might be a fake one, and the price can reverse or slip back again in this zone. But in this case, when the price breaks the consolidation, which is a 2 day consolidation, on the third day it breaks the consolidation zone, it creates an overbought zone, a very small, brief overbought zone, and I will mark the high of such zone, which I get after an consolidation, and here is my entry. Okay, the pink line. Now, if I may put, zero point 0.5 is generally what I take as an SL because you need to give price the ground in which it can have a good movement and go to your target range. Okay, now this is 6th of May and we have been tracking this price from 30th of April. Again, 1 2 days of full consolidation, third day the breakout, but still we are not keen to have an entry here because if you do so, then still the price can take a movement downwards, which is again nearly of 0.75%, which is a big amount. And if you're trading intraday options and futures, you don't have to see loss, especially up to 1%, because it will be a great amount. So, how can you avoid that? You have to wait for the confirmation, which is a smaller overbought zone after the consolidation zone of 2 days, or maybe a day or 3 days. Okay. Now this is our entry at 1422. It's a 1 minute time frame which we are looking at. and this is our entry. In an intraday setup, if you are able to take, okay, this might convert into a swing trade if we go for another day. But in an intraday setup, if you are able to take 1.6% of returns in an equity chart, then your would great option chart would give you at least 50% increment on your capital. If you are investing 100 rupees, then or $100, then you can definitely get up to $150 or 150 rupees. Okay. And if you are a risk taker, you might have that extra benefit if you hold for the night and book your target another day. Okay. Now again we got an overbought zone here. Now you can see that after getting a bigger overbought zone here at the bottom, we have noticed a consolidation zone followed by a fall here with an oversold zone, and again not exactly a breakout here with a gap down here, and the price has started falling again extensively. Okay. Oversold zone. Okay, guys, I will wrap up my video here. And if you have any doubts regarding anything which we have covered in this video, I will be happy to answer them. Let me know those doubts from the comments below. If you are new to the channel, subscribe to our channel